Hello everyone, this is Jay and good morning on this awesome Sunday. And of course, in today's video, it is my weekly buys and the update on my portfolio. So every Sunday morning, what I do is I check everything that I purchased in the past week and give an update on my portfolio after my purchases to see where everything is at. But before we start, please don't forget to hit that like button. I really appreciate how the channel is growing, and I really appreciate everyone's comments. The channel right now is at over 200 subscribers, which is awesome. I'm really happy about it, and I really appreciate it. All right, so let's go into my portfolio. So my portfolio consists of 33% ETFs, 20% real estate, 16% financials, 11% healthcare, 12% consumer staples, 3% consumer discretionary, and 3% information technology. All right, so let's go into my updates tab. And here it is, everything I purchased. And all of my purchases were made on Friday, as you guys can see here in column C. And column A is pretty much the companies that I purchased, and ticker symbols are right here. And then column B, it is the purchases that I made, how much money I put into each company. And column D, it is the share price where it was at when I made my purchases. All right, so the very first one that I did was SCHD. I put $45 into it. The share price was at $70.31, and I really want to grow that position right there. In SCHD, it is my favorite ETF. Then my second purchase was VYM, Vanguard's High Dividend Yield ETF, which I put $35, but it closed at $34.91 the purchase, and the share price was at $103.90. And my next purchase was my weekly $10 to my S&P 500 index fund FXAIX from Fidelity, and the share price was at $151.41. Then I put another $10 into ticker symbol PFE, Pfizer. It is still under my cost right now, so I made a purchase of $10. Share price was at $31.12. Then my next purchase was $10 of Vici, VICI, and the share price was at $29.26. Then, of course, Realty Income is still on a dip right now. It's still on the right cost. And I put another $10, and the share price was $50.92. It is going up from where it was at pretty much at the beginning of the week. It was like around $46, which I didn't catch that sale right there. I really wish I would have caught it, but I just didn't have any money then. All right, so my next purchase was $10 of KO, Coca-Cola, one of my favorite positions also. Share price was at $57.18. It is going up right now. Coca-Cola, especially after announcing earnings and beating earnings, they're going back up, and it looks like it's going to go back up into the 60s again. All right, my next position was J&J, Johnson & Johnson, which I purchased another $10, but it closed at $9.85, the purchase. And the share price was $151.56. This one is also on a dip that I'm trying to take advantage of to continue to grow my position. Then I put $5 into each one of these, which is MPW, Medical Properties Trust, and Kenvue, KVUE. So Medical Properties Trust is right now on a big dip right now, half of my my cost per share. And the share price was at $5.39. So I'm trying to put like $5 every week so I can continue to bring my costs down. I am planning on holding long term. Yes, call me crazy, but yes, I'm planning on holding long term. I don't think hospitals are going to be going away anytime soon. Hopefully their management team fix everything like they have done in the past, or get through the high interest rates time that it is right now. Then Kenvue, which is Johnson & Johnson spinoff, KVUE, the share price was at $19.49. All right, so the grand total was $149.65 in purchases this past week. And guys, I have not spent the $144 that I still have there. And I don't know if I want to add a position or if I want to distribute that through my allocations right now. I'm still thinking about it. I have a couple of stocks in my watch list. I think I'm taking too long, to be honest with you, but let me just continue thinking about it. All right, so let's go into my dividend portfolio, and here it is. Um, I am down actually $434, but a couple days ago at the beginning of the week, I was down about $800. This is how crazy it is. This is why you gotta just, buy and hold. Of course, not financial advice, but just buy and hold. Don't just sell because, the share price is on a dip. Especially if you are holding a great company, just because look at this right now. I'm down $434, but I really have not lost any of that. Why? Because I haven't sold my positions. I'm still holding. All right. So my number one position right here is SCHD, which is in column A. In column C says the total amount of shares of each company, which I have 29.54 shares, 29 and a half, which is awesome. My goal is to get to 50 as soon as possible, and I'm really trying to get there. My cost per share is $72.55, which is in column H. I really appreciate Vested Interest, which I'm a fan of his channel. And he showed me that I was wrong in this tab, and he was 100% right. I had the ex-dividend month and not the ex-dividend pay, and I do want to see the when they pay, when they make the actual payment, not when they have the ex-dividend. So I just changed it. I just updated it yesterday. And right here it shows all of the months. Hopefully I did change it right. I went into my Fidelity and then I looked into each one and updated it manually. All right. So in column I, it is my market value for each one. So this one goes up and down depending on how the market does. And right here, I sorted all of my positions by market value. So right now, SCHD is still my biggest position, and it will be there for a very long time. $2,000.75 market value. I am down right here. In column K, it shows how much I am down. So I am down $67.97. In column J, this is what I have. Everything that I have invested of my own money in the total cost basis. And also dividends reinvested, because I have the drip on most of the companies right here. I do believe I have the drip on everything, but I do have to double check. I forgot to double check yesterday. One of the things that I totally forgot. All right. And then, so let's go into my second position, which is Realty Income at 22 shares right now. I'm almost at 25 shares, which is the goal before the price goes back up. I do believe I will get there because interest rates are still on hold and it's still very high. All right, my cost per share is $58.84, and my market value is $1,120 right now, which is awesome. It is a lot of money, and I know it shouldn't be that high, especially on a single stock, but I really like the price that it's at right now, and I'm really taking advantage before this great company goes back up. All right, my next position is Bank of America. I have 28 shares. And my cost per share, it is $28.49. I am still in the negative, but only by $1. So it looks like it's performing pretty good. My next position is J&J, 4 shares right now. And my cost per share is $161. So I am in the negative by $42. That's why I bought some more. And I am planning on buying more so, as long as it continues to be under my cost. And then my next position is Main Street Capital, which is another one. I did not make any purchase this week, but I wish I would have had. But next week, I think I am going to put some more money into it, no matter what the price is at. I really like their special dividends, and they just made a dividend increase. So I want to take advantage of that dividend increase that is going to start next year. In January, it's going to start the dividend increase. So my cost per share is $38.10. Right now is above, and I am in the positive by $40. Procter & Gamble is one that I did not put any money, but I want to continue growing this position right here. And Randy posted a very, very good comment about not making any purchases on any company just because they go above a certain price. And I do agree with him. I think it is a comment that I want to review in another video. But he called it the anchoring effect, which means when a company just goes to a certain price above your cost per share, and then you just don't invest in it because it is at a higher price. But then that company just continues to go up and go up and go up and up and up, and then you miss that opportunity. So it might be a comment that I might make a video on and just talk about it a little bit, because I think we all need that advice. And thank you so much, Randy, for giving that comment that I just noticed actually this morning when I was going through my videos. All right, my next position is VYM. I have 4.2 shares. I am tackling this one. I'm really trying to bring it up to the second spot next to SCHD. And my cost per share is $104. The price is almost at that. Right now is at my cost, very close at 103. All right. So my next position is Coca-Cola. I have almost 7 shares, 6.9 shares. I want to continue growing this company. It is under my cost still. My cost is $57.54. I really brought it down. I think I was, before it took a dip, I think my cost was like around $59, 59 something. And I really brought it down to $57.54, which is awesome also. But it's a company that I'm planning on holding long term. So I want to continue investing in it. My S&P 500 index fund, FXAIX, I have 2 shares. I am in the positive right now by $7, which is great. Then MPW, I have 57 shares. I pretty much almost bought another share this past week. My cost right now, it is at $9.81. And it is like pretty much half the price, $5.45. So I want to continue bringing my cost. I'm planning on holding long term. PFE is my next position. I have almost 10 shares. So I think by next week I will have 10 shares. And I definitely want to continue buying at these prices, $31.26. And my cost per share is $35.28. I started this position in June, and look at how it's growing. And we're going to take a look at the how much in dividends is making for my portfolio. That position right there, which it has a nice dividend yield actually. All right, my next position is Starbucks. Right now it's at $102. I have 2.5 shares. I was buying, like nibbling shares of this one, like buying $5 here, $10 there every week. And right now it's back up to $102, to over $100. My cost per share is $88.59. This is a company that I'm planning on holding long term. And I think I'm going to follow Randy's advice on this one. On not just holding just because it is going above a certain price, because I do believe Starbucks is just gonna be a even bigger company in the future. They continue to open stores, they sell their products everywhere. So I don't know, this is not financial advice, of course, guys, always do your research. But I do have that belief. Their stores are always full everywhere, and I see their product like in Target, Walmart, Aldi. What's the other store? ShopRite. In so many stores. That's why I invest this one. I don't like investing in an actual store. I like to diversify and buy products that are sold in all stores, but this one is definitely a big one that I do believe in it in the future. So, and I think Starbucks is going to be the first coffee store that is going to be in space whenever we go into space. So I think this is going to be a company that my grandkids are probably going to be, thank you, Grandpa, for for holding this company and giving it to us after I pass. So definitely thinking about the future right there. So then my next position, it is Apple, AAPL. And I have only 1.5 share almost. It is at a price of $176.65. My cost per share is $132. Right now, I am in the positive by $65. But I really want to continue growing this company. So I'm going to try to continue putting like $5 here and there and start nibbling some more shares and growing that position. My next position is Vici, which is also one of my recent ones that I started growing not long ago, next to PFE, Pfizer. And I have 7 shares already. My cost per share is $30.20, which is awesome. I do believe that's a great price, in my opinion, to hold it at. But I am still buying, so I want to continue buying. I want to continue growing that company, especially the dividend growth is great in this company. Um, my next my next position is Kenvue KVUE, 8 shares, 8.6 shares, and my cost per share is $23.80. I am down right now because I pretty much bought this one very close to IPO, to when it started this year. And maybe I should have waited a little bit, but I wanted to buy and hold it for a very long time, so I don't regret buying it at IPO. I'm just continuing to purchase shares right now, and then the smallest position in my portfolio is Stag Industrial, STAG. And right now, my cost per share is $34.83, and I am in the positive by $2, which is awesome. All right, so let's go into my next tabs, and of course, this tab right here, in tab N or column N, it is the dividend that they are paying right now per share in a quarter or a monthly. As you guys can see here, O pays monthly, Main Street Capital pays monthly, and Stack pays monthly. So I looked into each one yesterday, and this is the most updated one. But of course, SCHD, VYM, they have different. They make different amounts of. They pay different amounts on a quarterly basis. I'm sorry, I'm not finding my words. On a quarterly basis. So this one is always an estimate, just like the other ones. And this is in column N is my yield on cost, based on how much they pay in dividend and how much my cost per share is. This is my yield on cost right here. So some of the companies right now, like for example, it is over 6% at the price that it's at right now, but according to my cost, I get around 5.22% dividend yield. So this is an estimate, of course. MPW is my highest one. No, actually, my highest one is Main Street Capital, which is 7.4% yield on cost. And then my second one is MPW at 6.11%. I do have some very high yielders because a lot of my money is in the real estate sector. But I do like that. This right here, of course, column O is the sector that they are at. And I put ETFs into my ETFs and my index fund just to have it all into one sector. And then in column P, it is my estimated next dividend. This is how much they're gonna pay me the next time they pay. And some of them, like for example, SCHD, my estimated next dividend, if they pay 0.6545 cents, like they did the last time in September, I should get around $19.33. But of course, SCHD usually pays more in December, so I'm most likely gonna be over the $20 in payment in December for SCHD, which is awesome. I'm really looking forward to that. And as you guys can see here, my next higher payer, it is MPW at $8.61 in a quarter, which is awesome. It looks like, but if you put, like for example, Realty Income, this is my monthly payments from them. So I'm gonna be getting paid around $5.64 on a monthly basis from them, from my position, so which is awesome. So if you multiply this by 3, it should be very close to that $19. It should be around $17, almost $17 in a quarter, which is also awesome. Don't get discouraged about companies that pay quarterly or monthly. I do believe it is the same as long as you make a budget and you know how to manage your money and your budget. And I do believe that you'll be fine. All right, my last column is column Q, which is the estimated yearly dividend. Of course, these two last columns are just estimated. They're not actual. money that I'm going to be receiving, but they're very close to what I should be getting. And right here, per position, my biggest position that I will be getting the most in the next 12 months is SCHD, which is around $77. And realty income in the next 12 months at $67 from this position. Right now, I average an around $363 in estimated yearly dividend, which is awesome. I definitely can't wait to make how much money, or the video of how much money I got paid, how much income I received in the month of October, which I already have all the information put together, and I think I am going to post it on tomorrow morning. So, be on the lookout for that video so you can take a look, and then also let me know how much did you make in income, in dividends in the month of October. All right, everyone. This is a chart that I just made yesterday. I wanted to see where most of my money was coming from, or most of my income. I wanted to continue tracking that. So my estimated yearly dividend by sector, that's what I put as a title on it. And as you guys can see here, the sector that gives me the most income in a yearly basis is the real estate, which is around $120 a year in dividends. ETFs is my second one at $95 a year in dividends. Then financials, $71. Then healthcare, $36. And then consumer staples, $32. I did wanted to make this chart right here so I can continue to stay motivated and see where I'm getting most of my dividends from. Maybe this will also help me make certain decisions and do certain things differently. All right, but I hope you guys like this chart. I do like it. Please let me know also if you guys think I should add something else. I was thinking yesterday to see what else I should add into my spreadsheet, so I can continue adding some more tabs, adding some more information, and I'm gonna take a look to see what other chart I should make so I can continue keeping track of these of my stocks. But I really like this chart right here. It keeps me very motivated. Just because you might see that, okay, I only get like $1 from this company, right now or anything like that. But if you total everything up, you see how much money it is. And of course, it is not life-changing money right now, but it just continues to grow. And I can't wait to make that next video so I can show you guys how my portfolio continues to grow on a monthly basis, which is awesome. All right, everyone, let me go into my size chart right here by market value. So SCHD is still my biggest position at 24%, 13% of my portfolio, Bank of America 9, J&J 7, Main Street Capital 7, PG 5, VYM 5, KO 4, and then everything else under 4%. All right, everyone, please don't forget to hit that like button. I really appreciate the support. I could not believe that the channel is growing the way it is growing right now. And it's really thanks to all of you guys. I really appreciate the comments of everyone. I do want to give a shout out. So I'll probably do it on a week, on one of the videos this week, to give a shout out to all of you guys. A lot of you guys have been commenting, very positive comments. And I really appreciate everyone's opinions also. Any opinion, it don't matter how it is. I will not take offense to it. I will not get offended. And I hope you don't also. If I reply back with my honest opinion. I'm always gonna give my honest opinion. So. But I really appreciate everyone's comments, everyone's support. I'm getting a lot of support comments in the comment section, which is awesome. I really appreciate it. All right, everyone, please let me know in the comment section, if you don't mind, what are you purchasing right now? Are there any other stocks that I should be looking at that are good prices right now? I know I have a couple on my watch list, but there might be other companies that I might not have, especially one in the I think it's the material sector. There's some right now, I think, that are good prices, I believe. So please let me know any companies that are right now at good prices. I like these companies because pretty much most of them I know them or I use their products, so that's why I invest in them, and they are great companies in my opinion. All right, everyone. I hope everyone enjoyed their Sunday with their family members or with any hobbies that you do. And then be ready for next week and see how next week the market reacts. So I really appreciate everyone's support, and I'll definitely see you on the next one. Thank you, everyone, so much. Bye. Disclaimer, I am not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.